Ashutosh Khajuria, ED at Federal Bank, is now joining us on the phone line. Ashutosh, what's your view on the rupee after the policy? We have seen mixed views so far in about 3-4 days' time.
Yeah, I don't see any major movement happening because the policy was just on projected links, or rather fully on the expected, view on the interest rate signaling. But as regards liquidity, there was some, sort of surprise, a pleasant surprise for bankers. So I think liquidity part definitely is going to help the bond market going forward. I think if that attracts investors, there are some capital movements happening on debt side. We may find, some sort of capital flows coming in, and if those happen, then rupee would strengthen. But overall, rupee would maintain its regular pace of about 3% depreciation in a year, roughly 1%, 0.75% to 1% depreciation per quarter.
Right. Where do you see the rates going? The 10-year bond yield after the RBI had a mixed reaction now. A slight bit of profit booking coming, but you believe that the trajectory is on the downside?
Definitely. Only thing is, initially, some players had built up for about 50 basis points cut. That has not happened. Now, that was a little disappointment maybe to some players. Mainly the equity market was expecting, more of 50 basis points cut. Bond traders as such were reconciled to something like, 25 basis points cut with a dovish statement. Because, there are three basic pillars of any monetary policy. There is the rate signal, there is the statement which follows, and third most important part is the liquidity. Because if liquidity is not injected, then I think the first two do not really help in transmitting the monitoring signals. So I think all three were addressed by Reserve Bank of India. They did cut by 25 basis points. Governor, his statement was, accommodative. He used that term. The accommodative stance continues. And finally, on the liquidity front, reaching the near neutral from, more than 1% of NDTL as deficit is a very good, sort of objective, very good target.
Right.
Would help, bringing more money to the corporate sector. So banks would have enough, sort of liquidity to lend to productive sector.
Right. Mr. Khajuria, just on some other trend that we can observe, a lot of small companies are going to the banks and, striking out big debt deals. So, a lot of debt closure is happening. Do you expect that to be the trend in the next 2 months? Settlements happening and a little bit of debt closure coming in, which should be positive for the banking sector overall?
See, any measure taken to recover the stuck money, whether it is, from the angle of the promoters or from lenders' side, because the money has to move in circulation. If it has got stuck in some of the projects which are not taking off, and there is some, asset sale which is bringing in enough liquidity to the corporates to reduce their debt and make it more manageable and make it viable. If that happens, it's welcome. It's welcome for economy, it's welcome for lenders certainly, and it's welcome for, the industrial growth. Investors as well. Right, investors who have invested in these companies.
The big problem area in terms of NPA was infrastructure, was probably chemicals, constructions, and the metals pack. A little bit of, relief is coming in on the infra side, on the chemical side. You think that itself should be taken positively, at least, that a little bit of issues are getting solved?
If you say biggest, then I think infra and steel would lead the pack. Metal particularly. Within metal, steel. And of course, infra. Then I think some impact on commodities was also there, other commodities other than metal also. But gradually that has stabilized. In fact, if we look at one of the most popular inedible commodity, which is oil, India has been benefited by its, fall in prices. So because we are a major net importer. As regards, iron ore and also, some other metal-related ores and all. It may not help our exports because we have been exporters of iron ore and we continue to be one. But then overall, I think if the iron ore prices gradually move up, which they have started, then I think it makes those steel manufacturers more bring some sort of relief to these manufacturers who own these mines. So for them, I think the competitors' cost increases means they'll be benefited.
Right. Sir, thank you so much for taking out time for us. Hope to see you again quite soon.